Thanks for joining us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon. We have a lot of stories lined up for you today, so let's get a quick check of the day's highlights. As the government's aggressive corporate restructuring unfolds, there are worries that banks could be saddled with sour debt and trigger greater instability. President Park Geun-hye is off to Africa today, and we take a look at what kind of opportunities this fast-growing market has to offer Korean businesses. We have these stories and more coming right up. Local shares ended higher on the heels of a Wall Street surge overnight. And such upbeat performance comes as we saw positive data from the U.S., along with more signs that the Federal Reserve might be leaning towards a rate hike soon. So what does this all mean for the Bank of Korea? Our Hwang Jae starts us off.
Korea's benchmark Kospi closed up 1% on Wednesday, reflecting the gains in U.S. stocks overnight. The Nasdaq on Tuesday had its strongest day in 3 months, while the S&P 500 ended higher by over 1%. Investor sentiment was buoyed by robust new home sales data in the U.S., as well as comments from Federal Reserve officials who continue to express confidence about the economy. This all raising expectations that the bank may raise interest rates as early as next month.
I think so. I think you're beginning to see a wake-up call among a set of investors that have been largely complacent about the idea of implicit dovishness coming from the Fed. And I think with the Fed's confidence come market confidence as well.
But the possibility of a Fed rate move is, in turn, a burden for Korea's central bank, as it would give it little room to maneuver its own interest rate to better support the government's corporate restructuring drive. Korea Development Institute, a state think tank, has called on the BOK to introduce a more expansionary monetary policy to buffer a slowdown that would follow the corporate shakeup. Now, with a potential Fed rate hike in play, experts say it won't be easy to respond to such calls and further lower Korea's key rate that already stands at a record low of 1.5%.
The major problem would be the capital outflow by the two interest rates by the U.S. and Korea being tighter than usual. We think the margin would be 1%.
With that, analysts widely expect the Bank of Korea will maintain its wait-and-see approach in next month's monetary policy meeting, as it comes right before the FOMC meeting in mid-June. Hwang Jae, Business Daily.
Creditors of STX Offshore and Shipbuilding have mostly reached a consensus to end their years-long efforts to prop up the company and place it under court receivership. The mid-sized shipbuilder's largest creditor, Korea Development Bank, announced on Wednesday that there are no economic justifications or any practical benefits of providing additional funding, and that the move is inevitable. The country's number 4 shipbuilder has been under the control of its creditors since April 2013. And despite receiving roughly $3.3 billion worth of support over the span of 38 months, the shipyard logged operating losses of $1.2 billion in 2013 and $153 million last year. KDB says the decision on court receivership will be finalized by the end of this month. And it's not just STX. Ailing shipbuilders are continuing to perform poorly, and this has local banks on edge. Massively exposed to loans that might turn sour at any moment, banks could be facing some serious problems of their own as the government's restructuring gains speed. Our Park Jong-hong has this report.
The perfect storm seems to be brewing for Korea's banking industry as the nation's shipbuilding sector faces sweeping restructuring. This is because banks would have to ramp up their debt service coverage ratio when loans held by the shipbuilders, which are mostly classified as normal, turn out to be bad debt. Doing that would weigh heavily on their financial operations. Currently, the aggregate amount of loans held by the so-called Big Three shipbuilders, Daewoo Shipbuilding and Marine Engineering, Hyundai Heavy Industries, and Samsung Heavy Industries, come to about 50 trillion won, or roughly $42.1 billion US dollars. This is 25 times more than the loans of shipping companies combined. Experts fear the shockwaves from the loans turning bad could pulse through the entire banking industry, leading to devastating losses for Korea's commercial banks. There have been growing concerns about whether the country's state-run banks can handle the fallout from the government-led restructuring program. Korean shipbuilders, once growth engines of the economy, have been struggling to cut costs and secure liquidity to stay afloat in an industry-wide slump. Park Geun-hye, Business Daily.
President Park Geun-hye has embarked on her East Africa trip today. The African continent has been considered one of the newest growth engines in the global economy. So there are big expectations over her trip. Take a look.
President Park Geun-hye's trips to Iran and Mexico back in April and early May is said to have laid the foundation for nearly $64 billion in exports, according to Korea International Trade Association. And as competition in global markets gets fierce, the president's visit to Africa this week is expected to open a gateway for business opportunities in a new emerging market.
급변하는 무역 환경에서 살아남기 위해서는 이번 멕시코, 이란에서의 경제 외교처럼 새로운 시장을 개척하는 노력이 더욱 강화되어야 하겠습니다.
Accompanied by a large delegation of nearly 170 business executives during her trip, President Park will visit the countries of Ethiopia, Uganda, and Kenya before heading to France. Through this trip, the Korean government hopes to expand trade and investment, as well as secure more business opportunities in the region. The president will also see the launch of Korea Aid, a new official development assistance program in the region, which will provide mobile healthcare, food, and cultural contents to local African communities. So will the president's visit give a much-needed boost to Asia's fourth largest economy? Let's find out.
And to tell us more about this, we're now joined by Professor Choi Dong-ju from Sookmyung Women's University. Welcome to the program.
Good afternoon.
All right, so it's hard to deny that a lot of people think of military dictatorship, corruption, poverty, and war when thinking about Africa. But recently, analysts have been saying that Africa's economic growth will actually outstrip that of Asia's. So what kind of changes have you seen in some of African economies over the past couple of years?
It was true that the African continent and the member of the continents were called, used to be called the hopeless continent.
Helpless continent.
And then now specialists and commercial actors there and some policymakers at global level, they well regard it as the hopeful continent. And the Africa's economy especially arose as the key actors in global market used to be minus growth rate. Annual growth rate was keep on having the level of the minus. But recently it has kept on having their level at 5% annual. It's very high. It's much higher than East Asian growth rate.
Yes.
So in that sense, the Africa need to be called and recognized as the hopeful continent.
Yes. Well, in that sense, already a number of major economies are recognizing the African continent as an emerging market. So are businesses actively penetrating the African market now?
Yes, actually, even World Bank and Goldman Sachs, they have the 10 potential growing economies post China. Then among 10, 6 are African countries.
Oh, wow.
The 3 countries that our president would visit, and democracy and transparency, all those were secured by the conditions that multinational banks and funds, the condition that they have as the option to support them financially.
So like you mentioned earlier, President Park Geun-hye is scheduled to stop over in Ethiopia, Kenya, and Uganda, as well as France. In fact, this is the first time that a Korean president has ever visited Uganda. So what kind of economic relationship has Korea had with these 3 African nations? And what kind of footing does Korea have in general across the African continent?
In general, the stressful it predicts quite surely, including Uganda and Ethiopia and the Kenya as one of the 16 countries. We call it PC, post-China 16.
Oh, okay.
Then following the China in the area of commodity industry by 2025. Then there were only 15 investment cases from Korea to Ethiopia until 2013. But we need to look at some pre-handed our activities there. Officially, we did propel our public diplomacy in those three countries before.
Yeah, now Korea has actually been actively supporting those African countries by expanding the scope and scale of official development assistance, or ODA. Can you give us more details about this?
Yeah, actually, the Asia used to be, especially Southeast Asia, used to be the highest rate of proportion of our ODA to the region, around 50%.
Oh, wow.
Last decade was Asia was around 50%. Then Africa was less than 20%. But the last 5 years, our ODA to Africa arose to the level of 25%.
Wow.
Then we expect that by 2020 it goes up to the 45%. That's our expectation.
Now, there are growing expectations over President Park Geun-hye's trip to Africa, as well as its economic impact. What can we expect, though, from each of the countries that she's visiting?
Ethiopia has the highest rate, following the Cote d'Ivoire, the highest rate of growth. It's 7.8, almost 8% annual growth rate. The other one, Uganda. Uganda, the GDP is based on 60% of GDP based on agriculture. And they do have some difficulties in processing their commodities. So we can have the investment chance there. And Kenya has the also diplomatic the meaning toward us, because it does have the UN headquarters, UNEP, and other UN organizations, the habitat. And then the other one is that Kenya has the most, one of the richest country in terms of resources. Yes, that we can get access to the natural resources.
So definitely Africa has a great potential in many areas. So what should Korea do in order to boost ties and get a better foothold in the market?
We need to tailor and customize what competencies we would go with there. And then the market condition, we need to analyze those quite in detail and systematically.
So localization is the key.
Localization, and then we need to find the partners from European countries which has a long history of relationship with them, ex-colonizers, like France. So that was the key, the points that we need to take consideration of.
Now, along with high potential, though, comes high risks.
Yes.
So what should Korean businesses watch out for when they're looking to enter the new markets in Africa?
Transportation infrastructure and power plant, power supply. All this, industrial social overhead capital is now poor, still poor there.
Okay.
That is one of the risks. So we need to look at what conditions would improve the area surrounded by our investment. Number two, climate condition. Especially we need to support and they have high level of value once we invest there as agricultural industry.
Right.
We have done it. So if the agricultural industry is a key industry that we need to look at, then we need to check climate change. Lastly, we need to look at the level of civil strives there. How deep is it? How has it been rotated in what area? We need to look at it. So we need to have our own knowledge in the area and specific regions.
All right. Thank you so much for coming in today, Professor.
Thank you.
Samsung Electronics has promised a thorough review of the latest lawsuit to fall at its doorstep, this time from Huawei Technologies. The Chinese company filed 2 lawsuits against a Korean tech giant, one in San Francisco and another in Shenzhen, where it's based. The company is alleging Samsung has used as many as 11 of its patents related to 4G networks without its consent. In its San Francisco filing, Huawei said it's seeking cash compensation, adding that it spends about 15% of its revenue on research. The world's top smartphone maker said it will respond appropriately to defend Samsung's interests and that a countersuit was not out of the picture. The legal action comes after the two apparently failed to reach a cross-licensing agreement on mobile technology. Korea will extend its stock and foreign exchange trading hours by 30 minutes starting August 1st in a bid to increase liquidity and give the local bourse a lift. Korea Exchange said by extending trade to a 3:30 p.m. close, it hopes to enhance convenience for investors in managing their portfolios, as other markets like Germany, France, and Singapore are roughly 8 hours as opposed to 6 in Korea. The market operator added that it expects the extension to increase equity trading by around 8%. Now, experts say this move comes as the country aims to enter the MSCI Developed Market Index, but they question whether the extended hours will have the desired effects in the long term, and that the country's economic fundamentals are more important in bolstering the stock market. And that wraps it up for today, but we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and goodbye for now.